Okay, hey, Ryan here for the weekly mortgage update with James D. Piazza, founder and CEO of Bond Street Mortgage. How's that for the intro this week, James?
That's sounds like you're ready for the NFL Sunday.
Or too much coffee. All right. So you were telling me exciting new product here, and I think any agents listening, you should share this with your people. Maybe email this recording out to them. Flipper Money. Tell me about this Flipper Money program.
Yeah, so just continuing on the themes that we've hit on all year, heading in obviously to the fourth quarter here, but we talked about the need for inventory, the market recovering, real estate, residential real estate is back. And so with that, we have more product coming back for the investor. This is a fixed flipper product.
Fix and flip?
I'm sorry?
So it's a fix and flip. It's a buy, acquisition costs, and then the cost of repairs, right?
Yes, absolutely. And the way it works is depending on your experience. If you're a newbie, you're obviously going to be in the highest tier. So rates tend to go from $7.99 to $12.99, interest only, and of construction periods up to 18 months. What happens is the way the financing is looked at, the financing end of it is 80% of the purchase, 80% of the rehab, or 65% of the after appraised value.
Or 65% ARV. Did I get that right? 7.99 to 10.99 up to 18 months.
12.99 up to
12.99 up to 18 months. So how about points? Is this like hard money where you got to pay 8 points or something?
There will be a few points. So again, the more experienced you are, the less amount of points, but you're typically looking at 2 to 3 points, depending on your level of experience.
Okay, probably 2 to 3 points. And this is, you told me, more on the property than on the borrower. I mean, I guess
yes.
Like the rate.
Yes, you're going to look at the borrower. We're going to look at credit, of course. We want to see decent credit. But it is going to be driven by the project itself. It's not driven solely on debt to income ratio, where a more traditional mortgage obviously lies. This is about you as an investor and what your balance sheet looks like more, especially for the less experienced people, to have this funds available.
Okay, so this is, it's not like a no doc, but this seems to be a nice middle ground between those investors out there who have to deal with hard money guys who put a lot of pressure on them to balloon out in 6 months. What's the balloon look like here? 18 months?
Yeah, 18 months max.
You got a little more time. You're probably getting a little more of a reasonable interest rate than you would with a hard money guy. You're getting the same funding because most of those hard money guys are dealing with a 65%.
Yeah, even if you're going to fix and hold and you need the money and you need to, it's not going to work on a conventional basis, let's say, you could always use this program and then we could always, work on the takeout as well.
Okay. Yeah. You would refi right into the
exactly,
other side.
to the permanent. Yep.
Great. So this is really cool. I'm going to share this personally with some investors I know down here in Florida. If you're a real estate agent watching this, this could be a way to generate business out of thin air. That's the term, because you can go back to anybody you've sold a house to in the past and say, hey, have you thought about doing a fix and flip? They're all watching HGTV, and just send them this video and say, hey, there's some options here that are a little less expensive than what used to be in the market. Right. Okay. So, and then James, I know you're a little pressed for time today, so let's just jump right in. Tell me where rates are at here in late October 2017.
Yep. So interesting thing has definitely happened, and it's continued. We talked about it last week. Rates are higher. They continue to go higher. We're probably near the highs of the year, definitely the highest levels since April, May. So 6 months for sure. And it seems to be the trend. You had positive early third quarter GDP this morning at 3%. They expected it to be a little bit lower because of the hurricanes. They thought that would affect GDP. The reason it was 3% was because inventories build up, which is a good sign for the economy. And that's actually 2 straight quarters of 3% GDP. Now, again, this was the initial number, not the final. It will be revised. We'll see what happens. But I can't remember the last time that you had that print. I think you have to go back quite a ways. I think we had 3% once in 2011, one quarter, but that was it. So you probably have to go pre-crisis to find 2 quarters of 3% growth. So, manufacturing numbers were better than expected. Again, we're being driven by an all-time highs in the stock market overnight. You had Amazon, Microsoft, Intel, Google,
Bitcoin,
all with record earnings, all with earnings beats. NASDAQ, is up quite considerably this morning. I'm not sure what it is midday. Dow all-time high because interest rates are going up and the financials are coming back. I mean, look at Bank of America. 2009 was $5 stock. It actually went into the twos. As of yesterday, I saw it at 27 and change. The banks make money. You're talking about another Fed hike in December. That looks like it's definitely happening. So think about all those lines of credit that they've just built up. That'll be 4 or 5 rate hikes overnight. So financials are back, and you're talking tax reform. That's definitely being priced into the equity market and the bond market because it will, at least the way it stands today, will add to the deficit. But it's also seen as pro-growth. So that will obviously affect the interest rates. And so overall, it's a very good economy. We're seeing some wage increase, some inflation. And, obviously they talk about inflation being a bad thing, but inflation is a very good thing when it's healthy inflation for asset classes like real estate. And so, you had the National Housing Pricing Index for August come out this week. Year over year, we were up 6.6% nationally on the housing index. So, with the biggest, the Mid-Atlantic region being the biggest gainer there at over 9% year over year. So,
people move up there? Just kidding.
I guess that's, prices are cheap, but, Pacific was, the New England division was flat. The Pacific region was up about 1.5%. 5% in the Mid-Atlantic division, 9.3% in the Pacific division. So huge gains. Obviously, you talk about tech, you talk about that as an industry. You see what it does to housing prices. You look at finance and you look at Wall Street, all-time highs. They're going to have money to buy homes. And again, that's all it comes down to, raising that participation rate, higher interest rates in the context of an improving economy. That is going to create more wealth, more money for us in the real estate industry, mortgage industry. I see this lining up. I don't know. I never really like to talk about it out loud because I don't want it to change too quick. But I think we're lined up well for a really strong run here. And yes, the stock market has been gaining and setting new highs above new highs, but we also haven't had 3% growth. I mean, it'll be exciting to see the next couple quarters develop. And if we average 3% from second quarter, third quarter, fourth quarter, and then first quarter, which typically is seasonally, is going to be the slowest. If you do that going into next year's spring market, wow, that's going to be gangbusters for the real estate industry.
So are we up over 4% for 30-year fixed?
You're still at about 4 1/8, depending on, again, so yeah, same thing, good credit, etc.
Right.
If you might even still be under 4 if you have excellent credit today. So.
All right, but it's creeping up. So, and I know you have to go soon, so I want to get this question in. What do higher rates mean for people who are on the fence right now before spring comes? Is now the right time so that you're not looking at another 1/4% higher in January? Is there any sense?
Yeah, I mean, look, we're busy right now. The phone is definitely ringing. There's definitely, we've had a super fall from a weather standpoint. So, I feel like the market kind of took a pause like it normally does at end of August through September. And I always say the fourth quarter is kicked off by that Columbus Day weekend. So that's kind of manifested itself again this year. And I see a strong and, from a funding perspective, we'll have a very, strong October historically. So I do see this continuing through the end of the year. We're hoping that the Farmer's Almanac can help us out and keep the weather decent through the winter, because I do see higher interest rates. So from a mortgage company perspective, I don't see a lot of activity in refinancing, although we're talking fixed flip, we're talking investment, we're talking second home, we're talking
new construction. Yeah.
Yeah, and your house just depreciated 9%. So how do you tap into that equity to go invest in other real estate? So, people are always going to need money, and interest rates. It's not like they're off the charts where you're not going to think about maybe, hey, I can free up 100 grand. Yes, I was at 3.5 or 3.75, and now I'm going to be at 4.25. But if the opportunity is right, then you may pull the trigger on that regardless. But definitely, definitely is a home buyer's market. From a mortgage perspective, we're definitely heavily focused on purchases, as we've always been, but more so than ever.
Well, I'm going to come out and say it because I have a real estate agent's bias. I'm going to say now's a good time to buy, because if you go into spring and it keeps going like this, prices are going to jack another few percentage. And when you're talking about a few percent on $300,000, $400,000 home, it's big money.
Huge. I agree. The flip side of that is absolutely I would be ahead of that curve. Definitely a good time to buy. And hey, maybe you'll sell next spring because you'll have made good money and you can trade up in that market. But I do think we will absorb the higher rates because of an improving economy. And if you're going outside and you're feeling good about things and it's a sunny day, I always say, right, the difference between 4.5% and 6% on a $400,000 mortgage is about $425 a month, about $5,000 a year. Significant.
Wow.
But if if your wages went up 3%, okay, now you would absorb which we just had wage growth at around 3%, which is the first time in a long time. You're gonna be able to absorb that. And I do see real estate values rising in that perspective. We've just been so dormant that now we've kind of built a good foundation to build off of that. With higher rates, we're still going to see that appreciation. So I'm going to stick to that story to at least to 2020, and then we'll see what happens from there. But I'm excited about the next few years in this business because we've had so much to recover from, and now we have so much of a better foundation that I can see us, really coming back strong in the residential market.
Great. Thanks, James. One thing stuck out with me there. You said 3% rate increase. I've been with you about a year, so 3% times. Just kidding. All right. Well, thanks, James. January. Have a great weekend. Hopefully we got 2-6 coming our way for the Giants. And
no, we can't lose this weekend. We can't lose.
Okay, we're in good shape. I don't even know who we're playing anymore.
We're on the bye.
Oh, all right, yes. All right. Anybody watching this, if you have any personal mortgage needs, feel free to reach out to James. Go to bondstreetmortgage.com. If you're an agent, share this fix and flip stuff with your past clients. Post it on Facebook. This video, you might find you get some business out of thin air. Thanks, James.
Absolutely, Ryan. I'm not sure if you wanted to mention the survey that we're going to put together. Talked about the ISA services.
Great, thanks. Great job. Yeah, so we should look out for a survey about ISA stuff. We've been thinking a lot about ISA services, what's involved with that. We'd love to hear your feedback. So look for that in the private Bond Street Facebook group. If you're not already in the group, go to bondstreetmortgage.com and ask us about it. I'll make sure there's a link there for it. Okay,
awesome. Have a great weekend.
Yep. Bye.
Thanks, Ryan.